Okay, so today we're talking about the FHA Streamline loan, and this is the brand new loan that the government just issued for all loans, FHA loans rather, that were issued before May 31st, 2009. Okay, that's the cutoff date, that you had to have gotten your FHA loan before that date. If you're in that situation and you haven't taken advantage of these low rates, now is the time to act, because this program that we're going to outline right now is amazing. We're going to go over this. This is a streamline loan, and what streamline refers to is the process of getting the loan. You don't have to provide your tax returns. You don't have to provide all this documentation. I'm going to write down what you need right here. You need your driver's license. Okay, you need to be able to show some picture identification of who you are. You need a social security verification. That could be a social security card. Sometimes people give us W-2s. Those work as well. You need a month of bank statement. Okay? Statement. You also need your normal disclosures. You need to actually apply your application for the loan and all of the lovely disclosures that come with it. Okay? You also need a new FHA case number. Okay? This case number is something that we order, so we'll take care of that for you. You don't have to worry about, oh, I need to get my FHA case number that way. The other thing is that you need to do, this is in your favor, you need to have at least you need a greater than 5% payment savings. Okay? Greater than 5% payment savings for this to work for you. Now, some questions to answer really quick about the Streamline. That's all the documentation you need. You don't need all of these tax returns and all this other stuff. Now, some other things about the FHA Streamline that are really, really good. You get to skip a payment. Okay? You're going to close at the end of the month. Let's say it's March. You close at the end of March. You don't have to pay April's payment. Your next payment isn't due until May. All right? You will not need to make that April payment. I'll make sure that everyone knows that, so you can just skip that. Now, let's talk a little bit about why this date happens. Right now, for loans that were issued after May 31st, 2009, have kind of gotten on the refinance bandwagon a little bit. There is something with FHA called the upfront mortgage insurance premium. This is an amount of money that the government takes right up front for doing a mortgage loan. Right now, this is set at 1.75% of any loan that's done. So for $100,000, that equals $1,750. Now the government has come and set out, now we want to help everyone refinance that's on this FHA program. So we are going to lower this upfront mortgage insurance premium to, and I'm not kidding here, 0.01%. Okay, what that means is instead of $1,750 for every $100,000 that you borrow, 10 bucks. Okay, that's amazing what they're doing there. The upfront mortgage insurance premium is $10. Okay, now with the rates right now, another great thing about this is the rates back in 2009, May 31st, right about then and before then, probably the lowest that you'd be getting at would be 4.75% or higher. Okay. Now, if you streamline now from a 4.75 all the way down to a rate of about 3.75 with a, let's say that has an APR of 3.962 or so, that would save you $117 a month. Okay, just in your payment. Okay, so you get to skip a payment, you're saving $117 a month. One thing I want to make really clear right now is that with this FHA Streamline, back in the day, a lot of people, this is something we get all the time. They say, hey Phil, is it going to be worth it for me to refinance if I don't drop my interest rate more than 1%, more than 1.5%? And the break-even point is really what we look at. We say, okay, well, the reason why Streamlines in the past, we would tell people, you know what, this really doesn't make sense, is because you would be wrapping all of this money into your loan. Okay? With the new guidelines that have come out, FHA has come out and said, okay, if you have a $100,000 loan, and I'm doing this because I need a calculator to do all my numbers, easy math here, and you want to refinance that, we are going to put a maximum amount that you can refinance at right at about $100,000. It's your payoff, okay? So they look at your payoff and they take your principal amount Principal amount, they take the interest that has accrued, because you're always paying, when you make your mortgage payment, you're always paying for the interest that had accrued the earlier month. The interest, your mortgage insurance premium that is due for that time, and then on your payoff you have all these junk fees, okay? Now what FHA has said is that we will only allow you to wrap in these amounts here. That's your principal amount, your interest amount, and your mortgage insurance premium amount for that month. What that means is that your new loan amount would be very, very close to your old loan amount. You're not wrapping in thousands of dollars to take 3 years to break even with your mortgage payment. Okay? And these junk fees, these are like, they call them your fax payoff fee, and we're talking like 15 bucks. Okay? It's not thousands of dollars for these. We're talking 15 bucks, or sometimes they're as much as $40. Okay? So they will allow us to wrap all that in. Well, what happens with these other fees? Well, you have to bring those to closing. But you know what? If I'm saving $117 a month and I have to pay 55 bucks, it's worth it for me to save $117 a month every single month after that. Okay? So that is something that they've also done, is they've limited how much people can wrap money in back into your loan, which is a great thing for this streamline. So if you are selling your home, if you are planning on moving or something like that in the near future, and you're thinking, oh, I don't want to refinance, it's such a pain, there's so little documentation needed, as well as you're saving money right away. You're going to skip that month of payment. Okay? Of course, your interest that you would have been paying into that month is wrapped back into your loan. We want to make sure everyone's clear about that. But with your new principal amount, your new loan amount, the same as your other, this is such an easy loan, such a no-brainer thing to really see the numbers and say, hey, this would be great for my family. This would be great for my financial situation that way. Now, for escrows, that is something in the mortgage world that we talk about. When you make your payment, you also have your taxes and your insurance, your homeowner's insurance, that are part of that payment. Okay? And that goes into a separate bucket that the lending company keeps and pays your taxes when they're due and pays your insurance when they're due out of your escrows. Okay? Now, the old lender has that bucket. That bucket is filled up with money right now. When you do a streamline, they will send this money back to you. Okay? So you will be getting a check for that escrow amount back. On the new loan, they will require that they set up this new bucket on this new loan. But a lot of times we can give credits to where this, basically, setting up this new bucket is a wash. Okay, so you really don't have to bring in money for your escrows. The only thing that we're thinking about bringing in are any junk fees of 40, 50 bucks for the closing of the loan. So this is a great way to be able to lower your interest rate, lower your payments, keep your loan amount the same. It's a no-brainer refinance. We really recommend that you do it. Give us a call, and we'll make sure that you're well taken care of and answer any other questions that you have. Thanks for your time. What do you think?
Perfect, Ed.
Did I miss anything?